Hello friends, I am Pradeep. I'll be talking about our technical outlook on market. In last week's video, we had evinced the possibility of Nifty falling to around 5220, where the trendline adjoining 4675 and 4786, which are the bottoms made in February and May 2010 respectively, was presenting a support. As you remember, in last week's con call we had mentioned that Nifty can fall to this level, which is 5220, which emanates from adjoining these two bottoms, which were made in February 2010 and May 2010 respectively. It did not take longer for the benchmark to touch that level, as on Monday itself Nifty plunged to make an intraday low of 5196 and closed at 5258, losing 2%. As you can see, this is Monday's candle, and on Monday itself Nifty plunged to make a low of 5196 and then closed at 5258. The benchmark consolidated on Tuesday and Wednesday, followed by a modest 0.8% up move on Thursday. As you can see, Tuesday and Wednesday were days of consolidation, while on Thursday we saw Nifty gaining 0.8%. Friday brought an unexpected rise as Nifty climbed a whopping 2.8%, the biggest gain since 1st March 2011, which helped the benchmark not only erase all the weekly losses but end the week with a respectable 2% gain, which is the highest weekly gain in nearly 3 months. Friday's rise was truly spectacular and unexpected, as 5352, 5400 and 5449, which are the 38.2%, 50% and 61.8% retracement levels respectively of the 56055196 fall, were all taken out in one go. As you can see, if we take this fall from 5605 to 5196, then Friday's rise took out 38.2%, 50% and 61.8% retracement levels of this downfall in one go. Also, Nifty decisively crossed and closed about 20 and 34-day moving averages. If you can see, this is 20-day moving average and this is 34-day moving average. Nifty also closed above these two averages on Friday. Now, does this turn the view decisively bullish? No, not yet. As we have been mentioning, a resumption of the higher top higher bottom formation on the daily chart is the prime requirement to turn the near-term view decisively bullish, and we are yet to see that. If you see, after Nifty started falling from here, it has been continuously making lower top lower bottoms, and Friday's rise does not negate that pattern. It is still forming a lower top lower bottom formation, and until we see a resumption of higher top higher bottom formation, the near term view will not turn decisively bullish. The first requirement of a higher top will get fulfilled if Nifty crosses 5520, which is the top made on 14th June as shown in the daily chart. What we are saying that the first requirement of a higher top will get fulfilled if Nifty crosses this level, which is 5520, the top made on 14th June, which will then have to be followed up by a higher bottom. Now, making a higher top is not enough. That will have to be followed up by a higher bottom. As you might recall, here Nifty made a higher top by crossing this top, but then failed to make a higher bottom and went ahead to make a new low. So a higher bottom is also required to complete the higher top higher bottom formation. Beyond 5520, Nifty would find a tough resistance around 5605. 5605 is this level from where Nifty had turned twice, and which also coincided with 200-day exponential moving average here. On the downside, the 5343-5330 gap created by the gap up opening on Friday is likely to act as a support. On the downside, as you might recall, Nifty opened with the gap up on Friday, so this gap, which is between 5343 and 5330, will act as the support. Traders are advised to book profit in trading longs as Nifty approaches 5520, and wait for the resumption of higher top higher bottom formation before taking fresh long positions. With this we conclude the technical outlook. Thank you.